This segment sponsored by Foster Financial. Well, today is Wednesday, so you know it's time for Wealth Wednesday, providing you with amazing tips midweek. And joining me is Caleb Doan, who is the Vice President of Foster Financial. Hi.
Hi.
How's it going?
It's going well. Thanks for having me.
Yes, good to see you again.
Yeah.
And I'm really excited about what you're going to share today. So I know we are talking about QCDs. So let's start off. What is a QCD?
Yeah, great question. So that stands for Qualified Charitable Distributions. Okay. And it's really relating to kind of tax strategizing when it comes to your retirement accounts, which I think is really top of mind, for a lot of people right now as they're doing all their taxes. They have that stack of tax documents that they're going to drop off at their CPA. And I think a lot of times when people see, the tax forms that gets filed, they kind of get sticker shock when they notice the actual amount that they're paying to the government over the course of the year. So, one question that we'll sometimes get is, hey, am I taking full advantage of the deductions that I have available to me? Is there any sort of tax strategies that we can use to reduce the amount that I'm paying? And one strategy that I notice a lot of retirees don't take advantage of that they could is these qualified charitable distributions. So it's a really good opportunity that people certainly should take advantage of.
Okay, great. So let's break it down. So what does that mean specifically for those who are reviewing their taxes? Is this something that they're like, okay, this is an amount that I could take, or these are items that I could deduct from?
Yeah. So it's really kind of this specific strategy that's available to people in a certain circumstance. Okay. So it's those who are over the age of 70 and a half. And who
have, get that half in.
Of course, the government loves to make it complex.
Yes.
So 70 and a half, and they have pre-tax funds, and they regularly donate to maybe their church or a charity, which we've really noticed, a lot of people in Fort Wayne are very charitable minded.
Yeah.
And I think a lot of people think that if, they donate, let's say $10,000 over the course of the year, that's, maybe their tithe to their church. That's, of course, less than the standard deduction.
Right,
and so, a lot of people think, hey, I don't have enough to itemize, so I don't really get any tax benefit from doing this. And, most people have more, altruistic reasons for donating, but they think there's no tax benefit. But if you are over the age of 70 and a half and you have pre-tax retirement funds like an IRA or a 401k, you can actually donate to a church or a nonprofit or a charity completely tax-free from that retirement account. When otherwise, if money would have come out of that account, it would have been taxable. And so this is a really good strategy for people to take advantage of. And I guess an example of where this would work is, let's say there's a couple who are in their 70s, they have to take required minimum distributions from those pre-tax accounts. And let's say, their RMDs over the course of the year are right around $10,000.
Okay.
That $10,000 is taxable as income in that year. And let's just say separately, since they've done it for years, they just write checks to their church for right around $10,000 over the course of the year. Of course, that's less than the standard deduction, so they take the standard deduction and they pay taxes on the $10,000 that came out of their IRA. Instead, next year, if they were to take advantage of these QCDs, what they can do is get a checkbook to their IRA, and they write a check to their church from their IRA, and it's completely tax-free when it comes out of that IRA. So they still get to take the standard deduction, but that $10,000 that used to be taxable is now tax-free.
Okay, and so just to lay a couple of specifics out, this is 70 and a half and over. They're the only ones that qualify for QCDs. Okay, so that just eliminates a few folks out of that pool. So that's the first thing. The second is you're saying instead of giving money from your checking account to a charity, to give it directly from this pre-taxed account. The IRA, the CD, that could power a 401k. So an IRA or 401k are the two qualified accounts?
That's exactly right. Or any pre-tax account. The IRA and the 401k are the most common. There's some 403bs and stuff like that. And I think some question that people have is like, hey, when the church or nonprofit gets the check, is it exactly the same as if they were getting it from the checking account? Is it any hoops that people have to jump through? And it's exactly the same. The church just gets the check, they're able to cash it, it's cash, it's as good as any check from your checking account, but it just saves you money in taxes. And
so a follow-up may be, what about any penalties? Because you can only withdraw a certain amount from an IRA or a 401k. What is that about? So is it a matter of, these are the required ones? I know that you said that. So this is money that people have to take out anyway.
Right.
Okay.
Right. Exactly. And so if people are that RMD age, which it's either 73 or 75 now, depending on when your birthday is, but essentially that's money that you have to take out over the course of the year and normally pay taxes on. But if you take it out and it actually goes to a charity or directly to a charity, you get to avoid those taxes.
Wow.
And so, I mean, if somebody's in the 22% tax bracket and they're paying taxes on an extra $10,000 that they don't need to, that's $2,200 that they can save in taxes, for the next 10 years that they're in retirement. So it can certainly add up.
Yeah, it's very interesting. And I know that you all specialize in tax strategy. And so if someone has questions or they want to know if they're qualified or just kind of have this broken down more, what should they do? Yeah,
they can certainly reach out, give us a call. We're happy to meet with them, complimentary consultation. And I really have a checklist when I go through in the first meeting and say, hey, these certain things apply to you. And so even in the first meeting, people can get a lot of benefit and kind of identify what might apply to them.
Okay, wonderful. Thank you for breaking that down, Caleb. Very good stuff. And if you want to know if you qualify for QCDs or have any follow-up questions, take advantage of their complimentary consultation. We'll make sure we have their information listed below, and we'll be right back. This segment sponsored by Foster Financial.